mentioned, my name is Clynt Nauman. I'm the CEO and chairman of Alexco Resource Corp. We own and operate the Keno Hill Silver District in the Yukon Territory in Canada. And we are in that transition between explorer developer and developer producer. And as most people know, we are midway in our initial ramp up or startup period, which is going along reasonably well, especially given the challenges that we deal with in this COVID environment. So just to make the point that Keno Hill in the Yukon Territory is our only asset. We're entirely focused on it, and of course, hoping to be in commercial production later this year. We have the normal safe harbor statement that you see here. And so this is what the Keno Hill Silver District looks like. As I mentioned, north of Whitehorse in the Yukon Territory, it's about 230 to 250 square kilometers. It produced a couple 100 million ounces of silver historically at an average grade of 40 ounces per ton or more, so 1,200, 1,400 grams, something in that kind of territory, along with lead and zinc. So we're developing a project here that we regard as high grade, low capital, high return, where our ultimate objective is to be producing year in and year out about 4 million ounces of silver per year. We are Canada's only primary silver operator. 75% or more of our revenues are from silver, and we have and own and control this district scale play, which has, at the end of the day, about 100 million ounces of silver that we have discovered in all categories. 74 million of that is in the indicated category and about 30 million in reserves. We are in the ramp up phase. As I mentioned, we are shipping our first concentrate. We have shipped our first concentrate, and concentrate shipments continue. I'll talk about that a little bit in just a second. And we've been very successful on the exploration side, and certainly that has attracted a fair amount of attention. And as mentioned here, the silver sandbox, if you like, is a shrinking sandbox. There are fewer primary silver players in this market, and especially in a tier one jurisdiction. So here's just a few words on the ramp up. Our ramp up is slower than originally anticipated in 2020. That's directly related to the COVID situation and the restrictions that are in place and continue in place between international and interprovincial and interterritorial borders in Canada. We have about 120, 130 people working at the present time, both surface and underground operations. And we have another 20, 30 contractors on top of that. The Yukon, for all intents and purposes, is at full employment. And so any additional employees recruiting that we do is both inside and outside of the Yukon, and that slows down the entire process as we move along here. So in the first quarter, as I mentioned, we've shipped the initial concentrate. We are sourcing ore from the Balkeno deposit, which was a deposit that was in production previously 4 or 5 years ago. It was always planned to extract the initial ore to bed in and ramp up the mill from Balkeno. That is ongoing. That mine, Balkeno, will probably overachieve in terms of both capacity and grade at the present time. So we're pretty happy about that. And the mill optimization work is ongoing. We're working underground at both the Birmingham and Balkeno, at Birmingham and Flame of Moth mines, which are really the backbone of this project going forward. And developing towards the first ore production levels in both cases. We are redoing a new technical report, primarily because our mine plan was developed in a silver environment of less than $20. And so there was a lot of material that met cutoff, even in a $20 or less dollar per ounce environment that's not in the current plan. So we are revising that plan as we speak. And we will produce that new technical report in the second quarter of this year. And like I say, ramping up towards design capacity, 400 tons per day, a run rate of 4 million ounces of silver a year in the third quarter of this year. I just wanted to mention that COVID restrictions, the pandemic is still the number one risk on our register. We are not going to and we're not going to abrogate any of the protocols or any of the very cautious practices that we have incorporated into our plans here. And certainly if there were another flare up in the COVID environment, that would have an impact on us. So that's what we're doing in the ramp up basis. The project itself, as you see here, is this is in the original PFS, pre-feasibility study, is 1.2 million tons of reserves here, 6-7 years to mine life, average feed grade 800 grams per ton silver. So it is, it is a standalone, very high grade, if not the highest grade silver producer in the world. The capex is of that capex, that 23 million capex, probably 17-18 million of it is property, plant, and equipment that's already invested. So for us, it's all about working capital at the present time. As I mentioned, the run rate here is going to be about 4 million ounces of silver per year. This is the mine plan as originally published. Now this is going to change within the next quarter or so when we redo our reserves in a more realistic silver pricing environment. But originally this plan was 1.17 million tons of 800 gram material, as I mentioned. 700,000 of those tons came from the Flame of Moth deposit at around 670 grams per ton, and 300,000 from Birmingham. I think in the new plan, the Birmingham ore, of course, is a much higher grade, as most people are aware, at 900 grams per ton silver. I think as you see this new technical report come forward, you'll see an increase in the feed that's going to be coming from the Birmingham deposit. Just a couple of seconds. These are the deposits, Flame of Moth deposit here. This deposit anywhere between 3 and 7 meters wide. It's very simple. Underground mining, conventional cut and fill and long hole. In this case, it's about 40% cut and fill, 60% long hole, about 15 million ounces in the original or in the current PFS anticipated to come out of this deposit. And the Birmingham deposit, which has a smaller reserve, but we're going to see that change at 900, bit of the 900 grams per ton silver. Also important to keep in mind here that this deposit is diluted more than 30%, even to get to that 972 grams per ton silver basis. So the ramp is within a week or two at the present time of being at the first ore access level. And first production from this deposit will be in the very near future. We are shipping concentrate, as you see in those little pictures at the top. We ship our concentrate in what we call pots. Those pots, aluminum pots with lids. They carry 14 to 16 tons per pot of concentrate. And that particular truck, those 3 pots are filled with lead concentrate that average around 60% lead, with better than 5,000, close to 6,000 grams per ton silver, which would be very typical of the Balkino type ores that we would expect to be shipped. Looking forward to production from Flame of Moth and Birmingham, where the silver content of the lead concentrate will climb to more than 15,000 grams per ton. So that's about 3 times the grade of these pots. But even so, that puts that the concentrate that comes from the new deposit will be unique on the global market. But even so, the concentrate we're shipping at the present time is very valuable. The mill is operating 2-spec. This is 2-spec lead concentrate that's being shipped during the ramp-up process. And finally, exploration. I don't think anybody can argue with the success of exploration at Keno Hill. And in the most recent past, in 2020, we drilled an area that was about 150 meters below the north end of the Birmingham ore deposit to find that we have been able to follow along here on 100-foot, 100-meter centers, an ore zone, or at least a mineralization zone that ranges anywhere from 5 to 8 meters true thickness, and with grades anywhere from 1,500 to more than 3,000 grams per ton over those entire true thicknesses. So that's a zone that's, like I mentioned, more than 500 meters long, and with grades, generally in the 50 to 100 ounce per ton silver, category, which is a very significant discovery. We are currently mobilizing and are going to be drilling 25,000 meters plus of additional drilling here to increase our confidence in this new zone of Birmingham. Most interestingly and most importantly, the access to this new deeper zone is only a couple of 100 meters from the bottom of the already designed and proposed ramp at the Birmingham deposit itself, which is, as I mentioned, scheduled for production in the very near future. So quite exciting on the exploration side, and I'm not at all afraid to say that, success in 2021 will have a strategic impact on our plans and outlook at Keno Hill. We're focusing our growth on this exploration at Keno Hill, where obviously we have lots of upside, but we're not turning our backs on what else is going on in the industry. So we are putting some effort into reviewing what else is going on in the silver business. We are well up the curve on the ESG side. We originally, as you know, had an environmental company. So reclaiming the legacy mining disturbance in the Keno Hill district is part and parcel of what we do here. We do that hand in hand with First Nations, Natranayak Dun. We've contributed more than $20 million to that plan at present time. And on the capital capital structure side, where we trade, we're very liquid. We're trading, million three shares per day. We trade both in New York and in Toronto. And with that, I can wind this up. Thank you very much.